Well, thank you for being here, Barbara. John from Florida is checking in. Dorothy says hello from Texas. Matt says it's his first time as well, so we love it. Welcome into all of you. Mary Alice, I know you've been here before. I remember you being at a couple in the past, so thank you. And please keep letting us know in the chat. I am excited for this week, in particular this month. My name is Stephen Ground, editor-in-chief at Prosperity Pub. And like I said a few minutes ago, for those of you who are here, over the last few months, this would be the time where I'd kind of set the stage and talk about all the chaos going on in the markets right now, what we're diving into, big earnings reports, tariff news, chaos overseas. You're all too familiar with that. But fortunately, knock on wood, there isn't a lot of chaos right now. The VIX I was talking about is down at 16, which is very low, very stable for the VIX. The conflict in the Middle East seems to be resolved for the moment, at least. The Fed isn't meeting for another month. They didn't lower rates. We'll talk about that again at the end of July. Tariffs aren't on the front of most folks' minds right now, although that deadline is coming up on the 9th of July. We have a rare moment to pause and really reevaluate our trading strategy and approach, which I think are really valuable for us because sometimes you're just kind of treading water, right? You're just trying to keep your head above water. Markets are crazy, especially if you have money exposed in a long-term portfolio or you're doing longer term trading. You just want to figure out, like, do I close this? Do I open another trade? What do I do? Do I move money to gold, Bitcoin? There's a lot of questions swirling. Right now is your chance to take a breath, take a moment, consider where you are, where you've been, and think about what makes sense to do next. And you've got some time to actually think about that. So I thought, what better time to have our experts come in and share their top income trade ideas with you. We're going to talk about some really cool income strategies today, things you can just do over and over again, strategies. Jack Carter, who will be joining us today, is very fond of saying, and I'll probably ask him about this, strategy selection is more important than stock selection. And what he means is, you can trade Nvidia and, you can go bullish on Nvidia. And if you went bullish on Nvidia over the last 3 years, you would have probably made a lot of money. But there would be times where you lost a lot of money too. There are strategies where you could have used them for the last 50 years and been really, really positive over time. And that's some of the stuff we're going to talk about today. They're not maybe as sexy up front as, some huge call on Nvidia, but they're going to be a lot more controllable, a lot more risk controlled, and they're going to pay off a lot more over the long term. So you're going to walk away with 5 actionable trade ideas, whether they're specific, how to get into a trade right now, or whether it's, hey, here's how I'm approaching making extra cash in this market, and here's the steps I would take to do it. You're going to get those from our experts, whom I'll introduce in just a minute. But first, I'd actually like to turn the tables and ask all of you a question. And that is this: what do you think of when you hear the phrase income trading? And please actually write your answers in the chat because I'm really curious about this. So the question one more time, what do you think when you hear the phrase income trading? Just kind of your first gut response. Is it exciting? Is it scary? Is it new? Is it, something you've never dealt with before? I'd love to hear your answers, and I'll probably be asking this a few times during today's session because, I'm really fascinated to read the responses and see what you have to say with those because to me, I think people sometimes have a knee-jerk reaction. Now, Sherry says options that make money. She's comfortable with options. Alice says debit spreads, right? That's a great answer. Mary Alice says a trade where I'm going to make money. Love that. That's a good one. These are also, I'm really excited because these are pretty positive responses. I think this is going away. Definitely in even the 5 years I've been paying really close attention to trades and trading. I think this is changing a little bit. Barbara says it's exciting utilizing trades to supplement her current income. There has been kind of a stigma against income trading, a fear of it, which I think is a huge shame because if you find the strategy that works for you, which I'm going to talk about, or we're going to talk about today, it's the most powerful kind of trading there is. So I love that the responses we've got so far are really positive. Please keep sending those in. But today we're going to bust some myths about income trading, show you how to make it work for any budget, any risk preference, any desired approach. And joining me to do that are five of our team's top experts. So let's get to know them. First and foremost, really excited to have Nathan Tucci with us today. I'm sure many of you, all of you know Nate. He's got over a decade of experience trading everything from Forex to stocks to crypto and beyond. He's worked with dozens of the world's leading experts, helping them refine and develop strategies. He's grown his investment and dividend portfolio by over $100,000 in 2024. And he created the income machine, which is what he's going to be talking you through a lot today, that's taking over the trading world right now. And yes, you can still get a chance at the end of this presentation to try that out for free for the first month, I believe. So no gimmicks, no tricks or anything. You get a free chance to try it if you stick around with us today. So hope you'll do that. Graham Windman's also here. He's an option expert with over a decade of experience himself. He studied technical analysis under two of the top minds in finance. I should have changed this background photo because he's in Indiana right now, so not in Jacksonville with me. He developed the popularized, easy for me to say, wrap order options plays, which I'm sure is something he'll talk about today because they do help traders cut entry cost and control risk. And he masterminded strategies like lightning trades, moonshot trade alerts, and Nvidia Elite, as well as developing many of our best trading tools as well. Just a couple more answers to our questions. John said it's an interesting way to get steady cash if done right, which I think is a perfect summary. Barbara says, I'm far less afraid of trading than I am of continuing to struggle with, what she's going on, what she's struggling with personally, which I love. I'm sorry that you're going through that, Barbara, but I love that we provide that alternative. And I think that's what's really cool about income trading. Really cool opportunity for us today to talk about that. So we've got Kane Shea as well, former PIMCO VP portfolio manager. He helped manage $1.7 trillion of assets, including for companies like Disney, Apple, Google, and more. Traded $200 billion daily volume on average. And when you trade that kind of money, you're going to be doing a lot of income trial trading. He's traded with legends like Bill Gross and Muhammad Al-Arian. He's an awesome member of our team. We love having him on the roundtable. We've also got the income ace himself, Jack Carter. He's got nearly 40 years of experience, trained on Wall Street, and learned this the hard way, and has made a career out of generating income through the markets. He's managed his own funds so successfully that it never saw a losing month on record when he was active. And as I said, he's a master of every kind of income trading. He earned his nickname, the Income Ace, for a reason. Finally, Chris Pulver has spent nearly 30 years in the markets as a trader, a former money manager. He's an options chain analyst who uses income trades every day. He's also a player and instructor with the PGA of America, which I just think is amazing and I'm jealous of. And he personally manages multiple million-dollar trading accounts, which is fantastic. We've got the best guys to teach you about this today. Finally, I'll be here taking their questions and guiding the conversation. So I'm thrilled that you are here. I'm thrilled about all our panelists today, but I'm even happier that you're joining us right now. I think this could be a really transformative session for everyone here today. Like I said, it's a chance to find a new approach that works for you and what you need. So let's hear you in the chat. Let us know your name, where you're coming from, what you think of when you hear income trading. We've gotten a lot of good answers to that so far. And start sending in your questions if you have them for our experts. Maybe you'll have them more as we go on today, since there's not that kind of burning topic in the market that we're talking about. We're kicking off officially in 4 minutes, 3.5 minutes, but Deanna and I are here helping you get ready. So welcome to the Income Roundtable starting at 1 p.m. Thank you all for being here. Really excited to have a bunch of folks joining us. We've got Matt in Las Vegas joining us. So hi, Matt. Glad you are here. Richard joining in as well. Trying to find something to subsidize his income. Super excited for the 30-day access to the income machine. Yeah, I mean, I hope that works for you. I think it's amazing. A lot of folks are already having really, really cool success with it, and you're going to get to hear more about that as well before long. And thank you for being here, Richard. Brandon from Utah, welcome in. Des from Ireland, welcome in, Des. Thank you for being here in what I assume is late afternoon, early evening for you over there. Love it. Glad so many folks are joining us. Dan from Georgia thinks of covered calls, credit spreads, and debit spreads. We'll definitely be talking about some of those strategies today. And it's really cool. I'm really excited to dig into some of those and talk about what our traders are doing with them because we've got a lot of cool strategies that we're going to break down here today. So we are getting started here in 3 minutes, and I'm really looking forward to it. I can't wait. I love these roundtables. I'm glad that you are here. I know a lot of you are first timers, so welcome in and thank you for that. And I can't wait to talk about some income ideas. So it feels weird to not have, like I said, it feels weird for the markets to not be burning down around us and doing one of these roundtables. It feels like it's been a while that we haven't had some major chaotic event on the horizon or something. So it's kind of nice to be able to just sit with our gurus and um, talk about the markets and some great ways to make money. So we're going to let them get in here, and I'm going to answer a couple of questions I'm seeing on Slack here before we get started, and we'll rock and roll with it. But please, if you have questions, drop them in the chat, and we'll get started. Um, Camille from Cocoa Beach, welcome in. Not far from here. I was pretty close to Cocoa Beach this weekend. Went down to the Space Center, so glad that you are here. Retired 10 years ago, got bored very quickly. There's only so much cleaning a girl can do, so taught myself how to trade. I love that story, Camille. That's really cool. And I get that. I think I would go crazy pretty quick if I retired too. So love that you're here with us. I hope your retirement is a ton of fun and glad that you're trading with us as well. Julian from Sacramento, Doug, welcome in. Glad this is your first time. Glad you're here. Oh, and Camille's husband works at the Space Center, so maybe I saw him this weekend. A lot of folks checking in. Graham, welcome in. How are you doing today?
Doing great. How about yourself?
I am just fine. I have had the lawn crew right outside my window this whole last half hour, so hopefully they're done and we get some nice peace and quiet. Chris, welcome in. How are you doing?
I'm doing great. How's everybody? Happy roundtable day.
Absolutely. I love these days. I've been saying on the pre-show here, it's kind of nice to not have the markets burning down around us while we're doing one of these for a change of pace. I mean, the last one I think was a
So it's
lot.
been 60 days of nothing but up.
Yeah, true. But it feels like we always find a, major inflection point to talk about. And this is just more of like a cool strategy session and dive into some really neat, actionable ideas. So I love
For
that.
sure.
Nate, I know things have been crazy for you the last couple of weeks with the income machine and how much people are loving that. And I know we're going to talk about that a bunch a little bit later here and give folks a chance to jump into it for free. But how are you doing today? How's life? Keeping the head above water?
Doing wonderful, staying busy. You know, love when the markets just keep going up. Makes my life pretty easy. So we'll have to see what they can do from here. But yeah, I'm enjoying it. I haven't been that busy. I played golf yesterday in this beautiful 98-degree humid weather. So after that, Chris started with 3 birdies through 8 holes, and it all went downhill from there.
Oh boy. Did your club start slipping out of the hands with that type of humidity?
Honestly, by about hole 16, I was definitely blaming the sweat.
Need the extra towel and wipe it off after even on putts.
Yep.
Well, I didn't play last Sunday. I was supposed to play in Park City and it was 36 degrees. And I'm like, nowadays I'm a fair weather golfer. So I pick and choose my rounds very carefully.
That
There was
is
still
kind of
snow in the mountaintops.
That's unbelievable.
the
It's
opposite.
it's nuts. Yeah.
Well, we're all suffering right now, but hey, good for you guys. Welcome in, Jack. Glad you are here. Good, you're out in the cabin now in your natural environment, looks like. How is it out there?
It's amazing. You guys are talking about the heat. It was 47 degrees last night.
Nice.
I got all the windows open in the cabin all night and all day. And man, it is, I got to turn on the oven to like 400 and then open it up in the morning just to get a little heat in here. But outside of that, people love this market right now. And I got to tell you, this is the kind of market that scares me. Everybody loves it when everything's making new highs. I think I'm the only guy I know that gets more paranoid when it gets up like this.
I'm seconding that,
Oh,
Jack.
Chris is
I'm
there,
just
yeah.
I'm just curious, like when, like this
Hey,
is silly. This is getting silly.
Oh, guys, live a little. Bets on Bitcoin. Come on.
yeah, how about Circle and everything going on? But I'll tell you, we're here to talk about income. I just want to say one thing. Don't forget about the good old married put. If you have something that's super high running hot, like Nvidia, you don't want to sell it. You don't want to incur all that tax bill, but you're worried about it holding up here. Hey, get a little insurance. Buy yourself a little married put there. I'll give you that. Then we'll talk about some cool income stuff.
Love that. Thank you, Jack. And last but not least, Kane, welcome in. Glad to have you here as well. How are you doing today?
I'm doing awesome. I've only been here for a few seconds and I already love what I hear. So,
Yeah, we're diving right into it, which I love. Speaking of which, we've got a kind of a looser schedule today because we don't have quite as full a house, but want to dive into what I have for our lightning round here, so we can go ahead and get started. We're kind of, sitting right at or almost at all-time highs, depending on what market you're looking at, what you're examining. So my question for each of you today, what's your kind of, and Jack just hinted at, being worried, so we'll get to him in a minute, but what's your sort of 3-month overview for what you think happens next in the markets and where you're expecting to go from here? So we'll start with actually you, Kane, if you don't mind. What are you thinking?
sure. Yeah. So I'm on the same page as Jack over here. I'm a little worried when the market just completely ignores Middle East conflict and what's going on over there, and we just as if it never happened, right? So we are getting very close to all-time highs. At this point, it does look like we're going to, at the very least, touch them, and then probably, I would imagine, at the very least, pause or pull back, and then potentially go even higher. The thing to kind of worry about is all those things we were worried about before, the tariffs, the recessionary fears, those did not just magically go away just because people stopped firing missiles at each other. So I would be hedging, like Jack said. If you want an idea for a hedge using a married put, just like Jack said, I'd be looking at a leveraged bearish S&P fund and then throw a married put on it in case you're wrong and we go screaming to all-time highs. If you do it right, you're risking maybe between 5 and 8%. But if you're right about it, then that thing makes you tens or hundreds of percentages to help hedge your portfolio.
Could you drop a ticker or two for folks who might not be familiar with what they'd be looking at?
SPXU comes to mind. I believe that's a triple leveraged S&P bear fund.
Perfect. Love it. Thank you so much. And we'll come back to you in a minute, Kane. Chris, how about you next? Where are you? I know you're a little anxious right now. How are you feeling overall?
Overall fine. I've been talking about this as like potential melt up and enjoy the melt up. I just haven't been super aggressive on the positioning. My aggressive positioning was back in April, letting a lot of those profits expire in full in May, a little bit more melt up in June. Now that we are entering the end of June, I was watching I thought the Apex last week was going to be a little bit more volatile than it was, ignoring the entire escalation in the Middle East, ignoring negative GDP print today. So I was going to actually just share really quickly. We talked about this when it was like Liberation Day and everything after that. This turns out that price action is behaving a lot like it did during 2020. Now, it's not 2020. We're not dumping $3-4 trillion into the markets. The world's not the world in essence is not dumping just emergency money into the markets. However, if we get a tax bill passed at $2.4 trillion, that is more money into the markets. China's spending. Europe is spending. The world is spending. Non-US is performing well. The US is stable, which is helping the world. A lot of world ETFs are still in double-digit gains for the year. The US is just clawing back into like 2, 3, 4%. If you look at the chart here, I think this is very realistically what we should be dealing with in the next maybe 30 to 60 days. We had the huge crash during COVID. This year it was more of the self-inflicted trade war. We bounced back aggressively. Once COVID got back to all-time highs, and Nate talked about this a little bit last time we all got together as well. Once we got back to all-time highs, you can see there was a pullback, and we did get to all-time highs a little bit higher. This was a 10+% pullback right there, around 10 and change, and then shortly after that, another choppy pullback, but again, kind of hanging out a lot of noise right around the all-time highs. So a 10+% pullback, an 8 to 9% pullback, and then the market said, okay, I think that's enough. It's shaken out. Maybe the buyers and sellers, and we just start to break resistance and then head higher. So I think if we're going to continue to just plug away to all-time highs, we have to have some type of pullback. In my opinion, I would love a pullback towards the U.S.-China trade agreement gap, which would be around like 58 to 5,700. That might be wishful thinking, but that would put us somewhere around, about a 6 to 7% pullback on the SPX. I mean, if we tap all-time highs and go a little bit higher than 61.45, maybe it gets up into like that 7 to 10% correction. Summertime can be tricky for those corrections because it tends to be a little bit less liquidity, lower volume, and the markets seem like that's exactly what we're dealing with every day. Is just low volume, low volatility, melt up, melt up, melt up. And it's not a bad thing, but do expect volatility in the next 30 to 60 days. I think the market's going to shake itself out a little bit. Typically, July is a bullish month seasonality wise, but we've also had 60 straight days of bullish for the most part. We had like 2 indecision weeks and it still melted up. I was really shocked to see how the market reacted with that ceasefire. It was a pretty aggressive day this week just to gap up and push up and melt up. So I'm braced. What I'm going to talk about today with, my little go-to strategy is a collar trade, because this is what I'm generating on a lot of my own positions. Is I want the downside protection, but I'm also allowing the markets to melt up and get me called away at higher prices. So I'll talk more about that in a little bit.
Awesome. We'll dive into that in just a minute. Jack, we'll go to you next. And I'm a little jealous that you and Chris didn't give the rest of us the summer beard memo, but wouldn't look as good anyway. So how are you feeling, Jack? You said you're a little scared right now.
I'm feeling good in general, and the beard is a result of losing the razor. I packed 3 boxes in a satchel, and the razor just wasn't in there. So, and there's no place to get one. So, you're going to have to look at this for a while. But this market is good. The beginning of the year, I had like an all-time high in my own gains in my portfolio, and I just was telling people I don't want to see this evaporate, which it did when President Grump came out with the Liberation Day. And then now, it's all back and it's all that in a bag of chips. And this is the kind of market that makes me more nervous. I like it when there's chaos and it's down and people are scared. That's my kind of market. This kind of market, this makes me a little bit edgy because, not just the market, but like 39, 40 stocks I have are all, just killing it. And so I just don't want to see that evaporate again. And I just think it's time to spend some money on insurance. And that's just buying a put at the market where the stock is, right? So if it goes down, which it probably will, that put is going to soar in value. And that's why I like that, because like with Nvidia, you got a cost basis like I do, $51. I can't sell it, even if I think it's high and I should sell it and take a profit. I don't want to take that tax hit. So just buying the put is better for me. It allows me to stay in it. Selling calls against it too when it's way up there. That's golden. Selling calls, take the premium from selling the calls and spend that on buying an at the money put. Cost you nothing, and you got insurance for free.
Love it. That's an awesome piece of advice. Lightning round finishing out with Graham and Nate. Graham, you first. How are you feeling?
I'm feeling good. I don't know if this is the point where I'll just share my screen real quick. Nate and I've been doing that opening playbook show every day at 10 a.m. Back in April, I told everyone all-time highs coming in June. After the CPI fade, I said, well, maybe not June, maybe early July, but we're pretty much there right now. And I've been saying the July heat is coming up. If we just look seasonally speaking, first half of July, first 2 weeks is the strongest time in the stock market. If we look, the back half is nice as well. If we look at the presidential first term in office seasonality, strong on both accounts, whether it's a new president in office or a returning term. July is amazing. Look ahead, August and September get a little bit rocky. If you break down the sectors, each sector, it's one of those rare months where every single sector is typically positive in July. A couple that I really like there are the communication services sector, tech, and financials with a little bit of a turnaround. And another reason, I agree with everyone's analysis that we are going to see a pullback at some point, but I think we are going to see a move higher right away in July. I actually ran a report on Gemini, which is Google's AI, just now. Since the inception of the S&P 500, when it's made new all-time highs, 95% of the time it's gone higher the next 30 days. Not every single day it's gone up, but over the next 30 days, it's gone higher 95% of the time with about a 5% average move on the S&P. So I'm very bullish for July. I'm excited for what we have coming ahead. I do see volatility, further out past that 1 month point, but for right now, I think it's a really great time to be in the stock market. And if you rode it with us from that April lows, hopefully made some awesome returns as well.
Well, awesome. Thank you, Graham. That's a cool fact about the all-time highs. Did not know that. So thanks for that. And Nate. finishing out the lightning round with you.
Yeah, I mean, I'm bullish, but I'm always bullish, so it's that's no news. I like the opportunity to play long, but kind of in a more defensive way. So that's a bit of a catch-22 that I have, but that I'll explain in just a moment as we go a little bit deeper. But the big reason that I like a good bull market and good trends isn't because I want to trade it directionally and hope that it goes up another 1% tomorrow, because I would agree that's a little bit tricky game to get into. It's more that I like those good trends so that I can actually put kind of defensive trades below those good trends and be in an environment where I have a high degree of confidence that those can pay out. I believe Jack led the charge on this. The first time I ever heard someone doing this, 12 years ago, find the best trending stocks, opportunities on those stocks, and then giving yourself lots of room for error to be wrong. And that's really what I like to do. And so this is, for me, a great market to do that more, again, because I don't want to predict that whether the market's going to break all-time highs and go up 2% more or fade back 2% or go sideways. I kind of want to be in a position where I can make high confidence trades in any of those scenarios and still come out with lots of wins.
Awesome. Love it. Well, thank you all for that. And now what we're going to dive into for folks at home is we're going to get into kind of the nitty gritty of some actionable income trade strategies that you can use right now in this market that we're talking about being kind of uncertain whether we move higher or start to see some downside here. And Nate, we are actually going to turn right back to you first to kind of dive into, I know you've been working with the income machine. We've already had Jim here in the comments saying he just closed out an income machine trade for $1,045 in profit. So a lot of work, it's working for a lot of people. Why don't you tell us what you're looking at and maybe what you might recommend to folks right now?
All right. Well, first of all, thank you, Jim. Love to hear it. We're going to do some more live trading with the income machine a little bit later today, which I'm looking forward to. So I'll just try to give you, how much time do I have, Steven? I forget. You gave me the rules and I forget already.
Lightning round was a little more of a not lightning round. So let's say 7 minutes.
Okay. 7 minutes. Perfect. I can try to come in under that. Okay. So I'll give you guys the quick and dirty. Don't worry. We'll go into more details. And actually, I think Steve and I are going to stick around and give you lots of good examples of how to do this here in a minute. So hold on for that. But basically, the way that I approach the market in almost every one of my strategies is not trying to pick a direction and get the timing right, but to trade with a line in the sand. And so the best way for me to illustrate this is just to give you kind of a crude drawing. So bear with me as I do this, but I think this is kind of the easiest way to understand it. So for me, when I look at a stock that's going up, which is pretty much what I trade, stocks going up, you could trade it a million different ways. As you'll hear lots of different strategies today, directionally, Grandma often likes to use wrap orders, which can give you big wins on momentum stocks. My favorite thing to do is to actually pick a line in the sand below the price of the stock. So to give something underneath the stock that gives me what we call a cushion here. So this is basically my room for being wrong. And it depends on the stock and the situation, but let's say a couple percent. So you have like 3% of room to be wrong. Well, the line in the sand is the level to which anything above that equals a win, right? So if this is Apple stock and you are at $205 and you put a trade here, a debit spread for 197, 198, or a credit spread where you flip it around, either way, you now have this line in the sand. And what that line represents is that on expiration date, whether it's a week, 2 weeks, 4 weeks, 8 weeks, doesn't matter. If the price of the stock finishes above that line, you win. And what I love about it is that you win the full value of the trade. So it doesn't matter if Apple goes up 5% from here, 10% from here, sideways from here, down 2%, or heck, even if Apple comes down and then finishes back above, and it was a losing trade for a minute in the middle of the trade, but then it finished back above at the level of expiration, you still get a full value. You're not diminished versus the call option game. You have to get the timing right. You have to overcome implied volatility. And by the way, you have to get the exit right, which after years and years of talking to retail traders, I find that's really where people struggle. People think entries are hard. Exits are really, really hard. And so for me, taking as many of those factors out of the game and putting myself in a position where all I have to do is give myself some room for error. And if the stock finishes above that level, then I'm going to get myself a win on the trade, and normally a pretty substantial win, 20%, 30% ROI, something like that. So then you're kind of left with, if that makes sense, and that takes away as many factors out of, the hard part of trading as you can, you're kind of left with two questions. Number one is, okay, what stocks do I trade? And then number two is, well, what the heck options do I pick that give me the right line in the sand for the right ROI? So the first question is, what stocks do I trade? And for me, all you have to do is answer this question. Which one of these do you feel better about? A line in the sand on this chart where you enter when the current price is here and your line in the sand is down here, or a chart that looks like this where you enter with the price here and the place it can't go is right here. For me, you guys can let me know in the chat, I'm going to trade the left chart all day long, every day, twice on Sunday, where it is moving against the area that it can't go back. It can go back 2, 3, 4, 5%, depending on your trade, but it's moving in the opposite direction in real time of the area that I want to be protected against. So the way that I find these stocks, basic technical criteria, short-term trend criteria, a long-term trend criteria, a volatility criteria, a stabilizing criteria, and I'm just trying to find stocks that are good stocks, moving up that I want to get underneath and ramp up my chances. Well, then the next question is way, way harder. What options do I trade? Because if you like Apple, you want to get it below Apple, now you have to answer all these complicated questions like, well, should I go out 11 days with 3% of cushion for an 18% ROI? What about 25 days with 2.5% of cushion for a 23% ROI? What if I went 6 weeks out, got a little more cushion, but a little less ROI? You literally have millions of combinations of options to get you that answer. That's why I built this tool, which is called the Income Machine, that we'll talk about a little bit in more detail. It runs those combinations and finds opportunities that work to get that balance of the most income with the most cushion for the most bang for your buck. And here's one that I like right now. CAT, great stock, beastly stock, breaking out weekly momentum. Kind of one of the more boring stocks where even if we do get a flush, I think CAT has a better chance of holding up under those circumstances than, you know, your AVGOs or your AMDs. And this is exactly that kind of trade, folks. It's $20 below price or $18 below the price of the stock. Lots of room for error. And yet, as you can see, automatically calculated by the Income Machine, it's a 25% ROI trade. And this is really my wheelhouse. The idea of trading a stock that has plenty of room to go down, I'm only going to hold it for, 20, 30 days, and I can make a 25% ROI. If it does anything other than fall more than 4%, those are the kind of trades I'll sign up for. I'll trade as many as I can, especially if they're on a good stock like CAT. So again, I won't use too much more time. Steve and I are going to go way more in detail on this because I'm sure there's lots of questions that pop up as I give the sprinted version of that. But hopefully that, that gives you some clarity into kind of the way that I approach the market. And when I say that I'm aggressively bullish because stocks are up, I don't mean predictively bullish. I mean trading, with the comfort of a bullish trend, getting below the stock and trying to max out my ROI under those conditions.
I love that. Thank you. I love the Income Machine too. Really excited to talk about that more in a bit and show folks how they can get a chance to try it for free if they want to, which I'm also really excited to do. We've already seen a story from Jim in this chat about how well it's working. So thank you, Nate. We did get some questions. We'll ask you those at the end.
Perfect.
Now, Graham, your time is on the clock. How are you feeling? What are you looking at right now?
Yeah, I'm excited. Like I said, the next 30 days, I expect to be bullish. After that, I think there's going to be some volatility and some rockiness ahead. My top sectors right now, they've been these three for the last couple of weeks and months. Technology, communications, industrials. We just opened it up again to discretionary and financials as well. You guys know I love progressive, but I'm not going to talk about progressive today. I've done that enough. I'm going to give a little bit more of an aggressive play. I don't even know if you would call it income. We technically label it as income because it is a spread. But basically, I'm just going to make a bet that Nvidia is going to gain another 1% over the next few weeks. July 18th expiration. If it does, I make 100% return on investment. So this is not your safe income play. This is your more aggressive. We're gonna just have some follow through here on the highs. And Nvidia, who is leading the charge, is going to continue going higher there. So I'll post this in the chat. This is what I'm doing. Again, a little more speculative, but it's trading at $1.25. Max value is 250. So you have a chance to double your money if Nvidia only gains about 1% from here over the next 3 weeks.
Love that. Fast and furious. We love that. That's in the chat for folks who want to follow that trade. Anything else you want to share with folks, Graham? Or are we ready to jump
Oh,
on?
I figured I took too much time in the lightning round that I speed up that round to get you back on track.
Hey, we love it. We appreciate it though. I thought your insights in the lightning round were super cool because, I think I'd never heard that all-time high stat you quoted. So power of AI, I guess. I'm finding that one. So thank you.
However, yeah.
All right, Jack, you have earned the name the Income Ace with good reason. So this is kind of your wheelhouse here. I mentioned in the pre-show today one of my favorite trading quotes, which I don't know if you invented, but you certainly are the first person I've heard say it and use it a lot, is that strategy selection is more important than stock selection most of the time. So what are you thinking about right now? Maybe, start with that quote and what it means, because I did mention
Yeah.
it earlier, and I'd love to hear your thoughts on
I invented that saying, and
it. Love it.
it's true. Strategy selection is more important than stock selection. Now, when you're doing an options trade, the most important part of that is the underlying stock, but strategy selection is where it's at. Now, I'm going to show you something that is really good if you like income and you like making money. This is a really good trade. But I want to tell you also, once I find a stock that's in a good trend, the trend is everything for me. Once I have that, there's all kind of stuff I can do with it, right? Credit spreads, cover calls, just every kind of thing. But once I have that stock in a trend, and I think they're kind of hard to find, I don't jump around a lot. I'll go back to the well on that same stock every week, every month. For one time doing credit spreads, I think we went 8 months just doing Google alone, right? So
I
I
remember
go
that.
back to the well if that stock is in a nice trend. So I'm going to show you something that I'm doing. And I really like doing this stuff. So let me show you. Can you see my screen here?
Yep.
We're looking at Hood. I'm long Hood. I love the future. I like what it's doing. Just saying, I'm long the stock, so take that with a grain of salt. And this is a nice 6 months trend we're looking at here. This thing looks good, good, good to me, right? Now, of all the ways to skin the cat right here, I like the naked put. And I like the naked put because if you do this on margin, the yield is off the charts. And the reason the yield is off the charts is because on margin, you only need 20% down. It's so bizarre, right? If you're buying a stock on margin, you need 50%. But if you're doing a naked put on margin, it's 20%, plus the premium, minus the amount out of the money, blah, blah, blah. I got a calculator that does that because, I flunked ninth grade math and I hate doing the long form math. So I got that going for me with the calculator. So here's Hood, okay? Looking good in the hood, right? Everything's cool in the neighborhood. Now, we're going to put that naked put on. So here's how that's going to look. Can you see this here with the hood naked put?
Yep.
Yep.
Okay, so this is your hood naked put. So the stock price when I'm doing this, 83.60. All right. I'm selling the August 1st, 79 strike price put on hood naked for 455. That's a big chunk of cheese right there, 455. Now let me show you how this plays out. Now you got to know on naked puts, pretty much I'm doing it on stocks only that are in trends. And if I get lucky enough to get a little tiny pullback and I get assigned this stock at 79, I'll take it all day long. If I don't get assigned, fine, I'll do it again next month. So this is like 30 some days out. And I like to do this like, try to do it 11 to 12 times a year. But look how fat this is. Okay. So 20% of the stock, this is the calculator you can use. 20% of the stock is only 1672. Puts her out of the money by 460. Margin required. See, this is another thing. Everybody thinks you need a ton of money to do naked puts. This is $1,667 is all you need for that. You get $455 into your account instantly, guaranteed to hit your account by the CBOE. Bam, 455. That's a 27.3% return between now and August 1st. Imagine doing that 10 times a year. That's
Yeah.
for people that love making income right there.
That's huge. That's amazing. And I love one of the things you preach a lot, Jack, and I think makes your strategy so successful is you're only doing these on stocks you love in the first place.
Yeah, I already got some hood, but it got away
Mm-hmm.
from me. So I bought hood at like 50, 55. I was trying to build a position, but I don't build it all on one swipe. I let it trade around and add more to it. But this one just got away from me. I
Mhm.
didn't get, a full good 1,000 shares. So it's run off. So now the naked puts put me in a position where I can add to my position, but at the price I want. This is like getting paid for a promise, right? You're saying, I get to pick the strike, and they're going to pay me just for making the promise that I will buy the stock at 79 if it goes there. If it doesn't go to 79, which is the price everybody gets to pick, whatever they want, if it doesn't go there, I'm keeping the 455. If it does go there and I get put to me at 79, my real cost is 79 minus 455. So if I turned around and sold it at 79, I'd still make a profit. Very hard to lose on these naked puts if you do them right. But again, that's strategy selection over stock selection. And it's not even the strategy you use, but how you use the strategy, right? So that's how I use it. That's right. 80% of it is on margin. Yeah. Yeah, it's good stuff. So if you like making money, that's a pretty fat income trade for you right there.
Love it. Thank you, Jack. Awesome stuff. And we can dive in the Q&A a little more if folks have more follow-up. Let's move on to Chris next. Chris, I know you mentioned collar trades earlier. Why don't you walk us through what you mean by that? And
Sure.
someone would do one of those.
Okay. I took the trade just before we started this roundtable, so I'll go right through it and all the details. I'll just grab the screen here. So a collar trade to me is a bit more conservative. The ability to get the upside appreciation, but also have the downside protection. You can do it for free. You can essentially look at a collar trade as a way to finance the downside for free. So your hedge is free. That's always a good way to do it. Sometimes I like to do a collar trade with a upside call away price where I sell my call and still allow the underlying to go up. And I also put like the out of the money put in case things were to drop and get a little rocky. So the trade I put on today, I bought 100 shares of Tesla at 328.63. I have a bunch of other trades in my portfolio where I own Tesla at like 240, 230. This year, like I flipped Tesla several times for like $7,000 and $9,000 chunks. I'm currently holding Tesla in like the 230s and 240s break evens, and I'm just rolling calls every 2 to 4 weeks and just generating more income on it. With obviously I'm giving up some because we've gone up so much. Like the 220 lows this year up to 370, 380 or so. But anyway, point is, this is what I just put on. I just had a brand new account open this week, and I'm looking to generate some income. So here's how the numbers work. I just had a SPX trade from Daily Profit Feel for Profit today, so that's cool too. Tesla right here. So I bought the shares at 328.63. I added the collar trade. I'm going out to the August 15th. What I'm doing is I'm selling a 355 call. So I'm going out to a slightly lower delta. It's like a 45 delta, but I'm giving myself about $27 on the upside. So if price were to go up all by itself, if I just bought Tesla and it goes up to 355, I'm going to make roughly $2,700. Okay, that's just price appreciation on the 100 shares. Now, here's what the math does with the collar trade. If I sell the 355 call and I buy a 285 put, I'm actually still collecting $9.44 credit on that collar position. So because I bought the shares at 328 and I'm still collecting $9.44 credit on the collar, that actually brings my net cost basis down to 319. So right now, I give myself a little bit of a buffer where Tesla can stay sideways and I can still sit at a lower break even. Tesla can go down a little bit and I'm not taking on any risk. Tesla can go up and I'm either going to keep rolling my covered call near expiration or once I pull out some of that intrinsic value. So here's how the trade ultimately looks by expiration. If Tesla is greater than 355, I'm going to make $3,581 on the trade. So that's more if I just did the collar trade this way to lower my cost basis to get it called away for 35.81. Now, yes, I'm capping my upside. So if Tesla has earnings in late July and rips up $100, I'm going to sacrifice some of that gain. But also I had the downside protection in case something gets a little bit rockier on Tesla and maybe Trump and Elon Musk want to fight again and the price drops, $50 to $75. Well, I've got put protection to also lower my cost basis. We've talked about this a lot, offline, but like robo-taxis were just talked about, last week. They had kind of a showcase in Austin, Texas, and automated taxis, robo taxis, Waymo. This has become more and more popular. I think anybody that's somewhat bullish on Tesla can agree that there's a lot more things than just being an automaker in Tesla. I get it. Price to earnings is expensive. Price to book value is expensive, but there's a lot of the future, energy, AI, humanoids, robo taxis, autonomous vehicles. I think that Elon Musk is probably going to end up being like the first trillionaire in the world, in my opinion, between SpaceX and Tesla and who knows what else. But the way this trade looks is if it gets called away, I make money on the upside. I noted that I've got a debit of $10.97. So because my 285 put is out of the money, let's say that through earnings, we have a nasty move to the downside and Tesla drops to like $300. Tesla drops to 290. Well, as long as this 1097 put is gaining in value, I can also reduce the cost of my trade. So it might start off as this trade, as my collar trade. And then as this evolves, I'm essentially willing to establish a core position here and saying with my ownership of Tesla at 319.19, my goal is to either one, keep the shares and keep lowering my cost, or two, continue to use the ownership of the shares and generate income. Maybe that's covered calls. Maybe after August, I add another, 30 to 60 day collar trade and do the same thing for maybe another $5 or $10 income, right? So I want to give myself maybe that price appreciation. I mean, if I had my way, I wouldn't really want to touch Tesla and cap the upside until we get back to all-time highs again. So I am kind of playing around where I'm going to try to generate income because right now, I mean, Graham threw out some great stats like, yeah, I can completely see this market just melting up through July because that's the seasonality and nothing's going to stop it. But I don't forget what happened mid-July last year. We peaked in mid-July last year and had a 10% correction. So, mid-July to like August 2nd to the 5th, that was the Friday non-farm and the Bank of Japan deleveraging on the 5th. It's like, if we have some summer shenanigans, I could see some pullbacks. But anyway, that's why I want to say I like protection in all my core positions. The collar is a really good way to do it. Here's how the math works. And old school stuff, I just track this stuff on a spreadsheet. It's like I tried to build out, automated. I talked to all these brokers. You guys track, option trades and debits and credits, and nobody does. So just an old school spreadsheet. Just keep your debits and credits in line. Note your core positions, and that way we go into my spreadsheet. I just search for it, find it. And I mean, I have some trades like I've been doing collar trades on the SPY, collar trades on Tesla, collar trades on MicroStrategy, collar trades on Nvidia. I'm trying to think anything other core position wise. That might be about it. Some other ones like smaller stocks like Snap, but on the bigger ones like MicroStrategy, crazy premiums. Tesla, crazy premiums. Tesla at one point this year was traded more than the SPY. Option volume on Tesla is insane. So super liquid, which is good. High premiums. MicroStrategy, if you like the Bitcoin play, I'm doing that as well. But anyway, this is one of my favorites where it's like I at least have downside protection, let the price appreciate, in this little melt up environment, and I'll work through it. So this is core position, establish a strategy around it, protect the downside, get the upside called away. That's fine. And just keep doing it. And also, I don't want to lose the stock, so I'll just roll it. I'll roll it, give myself more time in the trade and hold it longer. And I can just keep, my 319, like, honestly, if we pin this roundtable discussion for today, we go out to the end of the month. If I still have this core position, my break even's probably going to be 295, 290, 285. Like I could probably lower my cost basis by another 20, 30, $40 by doing a trade like this. So if I don't want to let it go, this is a good way to keep chipping away at that net position and let the stock run.
I got a quick question for the whole panel and you too, Chris.
Yeah.
Would you ever get in a robo taxi?
I would.
You're not a believer, Jack?
You don't enter a subway. You don't enter like a subway or metro people mover.
Are you kidding me? I wouldn't get near a metro. There's not a metro within 2,000 miles of me.
Well, because we choose like trails over rails. But I mean, honestly, I feel like in cities especially, it's like this has to change. I mean, I don't know what it's. We've seen the bar charts floating around in our Slack channel. It's like the accidents. If we have more autonomous vehicles on the road, I feel like it's going to be a safer environment than people driving with texting and chatting and all sorts of distractions.
Yeah, you're right about that. But I'm just saying, you don't know, you don't got no brakes back there. You can't drive.
I
why does
it's
it not
like
surprise me that
isn't it
motorcycle
Johnny
Jack doesn't want to go with the autonomous?
What's the Johnny Cab? Is that Total Recall Johnny Cab? Or is that Demolition Man? I can't remember what movie that was. Where it was like futuristic Johnny Cabs.
Not a million years. If I ain't driving it and it is an internal combustion engine, I ain't getting in it. So
Oh
that's
boy. So Jack, you're not a fan of like the air taxis that are coming soon?
oh, there'd be no way. I'd be long the stock, but I ain't getting in no air taxi
Yeah, yeah.
like that. You know,
Yep.
there's no way. That's why I asked you guys. You know, you're all young. You're getting into robo taxis. You probably
Sure.
can't work for a robo taxi. I'll take a horse.
I mean, look, the amount of people the amount of people that are willing to order all their food on their phone, let it be delivered to their front door, get their groceries delivered to their front door, step outside, grab an Uber everywhere they go,
I
never
know,
drive their own
I
vehicle. It's
know.
like it's the amount of convenience is almost
Hey, that's your
disgusting, but
thing.
it's what people are doing.
So that's all this younger gen is all convenience. Yes,
Yeah.
getting the
Yeah.
robo taxi is part of all that, but I'd be terrified.
Yeah.
Understood.
Well, if you
About
do it,
risk,
Jack,
right? Risking
we'd
the
love a
markets,
video.
risking your life too.
We'd love a video
So-
blog if you ever get in one.
You bet. Do they allow you to smoke a cigar? Has anybody been in there?
Hey, you should try that. Yeah.
Jack once sent
Yeah,
us a
throw me
video
out.
where he was standing outside in a hurricane, but a robo-taxi is too much for him. So good to know. All right. Kane, want to give you your shot to walk through what you have prepared. So please take it away.
All right, awesome. So hopefully this will tie together a lot of the concepts that you've already heard before. And so I'm going to start out with the SPY, and then you're just going to watch me build this trade. So we're going to draw from a lot of things that we've already heard before. One of the things that we heard from Jack, which was amazing, was that the strategy selection is superior than the stock selection. So I'm just going to go plain vanilla SPY and build the strategy around the SPY. The other thing that we heard was that, there's high potential for continued movement upwards, maybe even breaking all-time highs. We got some great seasonality from Graham, suggesting that July could be really strong. But we also have some warning signs that, hey, maybe there could be a pullback at maybe as much as 10%, as Chris suggested, on our way there. So we want to keep all of these things in mind. Now, what makes a good income trade? So I think we should probably define that before, because we're used to income trades, but if you want to build something, you got to know what you're building. So to me, what makes a good income trade is high probability of success, a defined timeline, because you want to know when that money is coming in. Otherwise, can you really call it income? And then number 3, you want that defined return. You want to know what is coming in. So when Chris was talking about, hey, I want to hold the stock and it might spike up, and well, when you're looking at an income trade, that's not really your consideration. That's not the purpose of your trade. You want to know that I can take my 20% and there's a super high chance I'm going to get that 20%. And maybe a different trade would have paid me 100%, but I'm happy with that 20% because it was a lot safer than that 100% trade. So these are what we're working with on an income trade. And also what gives the income trade its safety is that it works in multiple environments. It can chop sideways, it can go up, it can go down. And of course, you're not going to be able to win in every single case, in every single scenario, but most income trades, if they're designed well, you can do nothing, it can go for you, or it can go at least a little bit against you and still make money. That's what Nate was showing us with his line in the sand. I saw someone type lion in the sand. I thought that was pretty funny.
I'm going to switch to that from here on out.
Right, yeah. So let's go ahead and build something. To do that, I'm going to use option strat just because it has great visualization. And I'm just going to start with let's see. Can I do a simple, I'm going to start out with a structure that's called a long call butterfly. Okay. Or sorry, I don't want a long put butterfly. So you know what? Let me try it differently. Let me start with a vertical, a debit spread, because that's what you saw the first two guys, Graham and Nate, do. So we'll start with that. So if you had a bull call spread on an SPY and you said, hey, I want to give myself some cushion. What kind of cushion do I want? Well, can I cover the 10% and still make reasonable money? Maybe not. What would be reasonable? What would be a reasonable pullback from this point and say I still have a good trade? And you might say maybe like 600. And so if it pulled back to 600, then if it pulls beyond 600, you're willing to admit that you're wrong and you're willing to take the loss. Okay, so if it pulls back to 600, I want that to be my defined range of safety. So if you want to do that, you would do something like this. On the SPY, depending on how much you wanted to spend, or your max gain and your max profit, or sorry, your max loss. So what we're seeing here is that it's going to cost us $455 for a max profit of $45. So that's about 10 to 1. So that's about a 10%. This is going out to July, beginning of July. So if we wanted to, we can stretch that out, because Graham was talking about how the first 2 weeks.
Can you try resharing real quick? I'm seeing it fine, but we're having a bunch of comments that folks can't see it. So.
I think our Zoom output must have got stuck, because a whole bunch of people said they're still all the way back on Hood from before Chris even shared.
Huh.
Yeah, I just saw Hood when you stopped sharing screen, so that was weird.
Does everyone see option strat now?
I do now. Yep.
Yes, I do.
Yeah, it was fine on our side, but
there was like
good,
20
good.
people.
Yes.
But still seeing
Hood, huh? That's weird.
a whole bunch of people still seeing Hood. Guys, you might have to log out and log back in. Sorry, apologies. You might have to refresh. Something with the Zoom output is being funky, I think.
Yeah, just pop right back in.
At the top, if you click on Kane's.
Oh, I see that.
Oh, Jack, I did not bet on you to figure out this technology. I'm not going to lie. I'm not going to lie, Jack. I didn't think you were coming to the rescue here.
The tab at the top.
I like it.
Yeah.
So is Jack sharing screen at the same time?
Jack's screen is still sharing, so that's why he's got both up there.
Interesting.
Wow. Okay.
So Jack, if you hit stop sharing, it might also even remove yours there, but that is hilarious. Okay.
There we go. Sorry to derail you, Kane, but that is
all good. All good.
Webinar first, I think.
Yeah.
And awesome. Thank you, Jack, for figuring it out. All right, Kane,
Jack, the man. Jack, you know what you should do next?
Robo-taxis.
You should invent a robo-taxi now that you figured out all this technology.
All right. Settle down.
Okay, so now everyone can see. We just built this vertical, this debit spread. And if we're going all the way out, so just say maybe we want to go mid-July. If we want to use Graham's statistics and say, hey, the first half of July is really good. So if we go all the way out there and we just build this vertical, what we're seeing is $70 max profit, $43 max loss. So that's about a 12.5% gain profit potential, which to me, it doesn't sound like a lot, but we have to put this in the context of income trades. So what is a lot? So for example, do you think credit cards make a lot? I think credit cards charge a lot. I think they make a lot. So what does a credit card charge? Some of them are charging like 30%, right? 30%, that's annualized 30%. That's highway robbery. That's what we all say. That's what we all feel when we do credit cards. So if I divide that by a number of days, divided by roughly 365 days, they're getting about 0.08%, 0.08% per day. Okay, so if I do 12% in, what is this, roughly 30 days, let's call it, less than 30 days. This is 14 days. 14 days. Okay, that's 0.8%. That's 10 times better than a credit card. Okay. So don't look at the small percentages and go like, hey, that's not very good. That's not don't get to, this is an income trade. It's not a naked or a straight single call or straight single put. So 12%, I'm not generally super happy with that. I like to make at least 0.5% per day. So I might adjust these, but this is what the market is giving us. This is what this particular structure gives me on the S&P 500. So if I wanted to improve that, then I would improve my structure. So let's go and try that long put butterfly that was started out with, same expiration, and now I have a few more decisions. I can be a little bit more, because we talked about a few things here. We talked about matching the previous all-time high. That might happen in this next month. We might blow through the all-time high within the next month. And we felt that we might pull back down about 10%. 10% at 611 is, what is it? That's 60. So that would take us all the way down to 550. That's quite a bit. So I don't think that you would not get paid on that at all. So earlier we determined about 600 was a nice little bit of cushion for us. So we're going to keep those numbers in mind. And if I wanted extra confirmation, there's little things that we can do. For example, on SPY, if I want to go to July 10th expiration, then I could check out gamma structures, for example, and see like what does gamma predict for SPY. Did I have, oh, it should be 711. Is that right? There we go. So gamma structures are saying, hey, 615, that was the previous all-time high, potentially 620 to downside. I want protection at 600. So I picked my levels pretty well so far without even looking at gamma. Gamma is tending to agree with me. So I like those levels that we picked. And let me go back to that. So I probably want to center this around that all-time high, around 615. And then I want to say, hey, if it hits 620 or above, I don't want to be a loser in this trade. Just like in the vertical, I don't want to be a loser in this trade. So maybe I can start playing around with this structure a little bit and turn this into a broken wing butterfly. And what happens right here in a broken wing butterfly? So this isn't really working out for me because the break-evens are a little too high. So I'm going to sneak it back to 1 week earlier and just play around with that and see what I can get over here. And if we center this, just say around where we are right now, actually that expiration didn't change much, did it? So if I want this at 615, or actually let's go back to 610. And the reason why I want that back at the 610 is because I want my break even. That break even to me is more important than the profit potential. So that's because it's an income trade. I want that margin of safety. So I'm constantly going to look at that lower break even point, and I want it to be around 600. Then I can start playing around with the rest of it. Okay, so what this is telling me right here is I like this July 3rd a little bit better. Let's do that. Okay. So what we're seeing right here is on this broken wing butterfly. Let me see. July 3rd, 595.66. Let's do that. Is that better? That's a little better. Okay. So what I'm looking at right here is a break even at 605. Is that good enough for me? 605, we did push higher today. So 605 would be right here. There's a nice technical support right there. So I'd be okay with 605. 600 would have been more ideal. But what we're saying here is that look at this profit potential. If we pin right around 610, then we can make the maximum profit right here. And over here, what I'm starting out with is a net credit that I collect up in this. So if we are hit those all-time highs and we blow through them, it doesn't matter. I'm still guaranteed that $138. But if we stick around where we are right now at this moment in the market at around 610, then I'm going to make $436. My maximum loss here is 1,000. So my reward risk ratio, or my return on investment, if we pin over here, is 50%, 50% almost on that invested capital and on the potential loss. But at the very least, I know that if we blow through that, I'm still going to make that 136, and I'm still making 136 over 1064. So 136 divided by 1064. Okay, so that's 12, and the same 12.5% that we were talking about earlier about with that vertical. So I'm still making a similar amount, and actually I'm making more per day because I changed the expiration to a little bit earlier. So that would be 7 days. So I'm making a 1.8% per day, which is way more than credit cards make. And then if it pins right here, so because we're not necessarily expecting 615 or to match the all-time highs within the next week, but we thought that there was potential over the next month. So this structure is still good. So This would be my trade. I have a great reward risk ratio, at least the same reward risk ratio that I would have in a vertical. This little bump in middle of the graph gives me higher profit potential if the market doesn't move that much. So if you don't think that the S&P is going to just go screaming higher and might fiddle around here for a little moment, it might putz around and chop sideways for a couple of days, then this trade will pay even better and give you a great reward risk ratio if we stay within this range right here. So that was my pick. I didn't want to go with a standard vertical. I wanted to teach you guys a little bit more and think about different considerations and how do you build trades around the market that you see rather than try to fit your known strategy into what's going on in the market.
I love that, Kane. Thank you. And I love one of the things that we've done today is, I think we've shown income plays for kind of everybody's preference level, which is one of the things I love about income is that really you can make it fit to what you're doing. So we've had some technical difficulties and things that threw off our schedule a little bit. So I want to make sure we get through one more question that I had. And then Nate, I want to give plenty of time for you to talk about the income machine and show that to folks. So let me ask you guys this question, and Kane, we'll start with you. What is the number one thing, if you just had to boil it down to one or two sentences, that traders need to know about trading income that they maybe don't?
Your risk. You got to watch out for your risk because a lot of income trades, they have an outsized risk versus the reward that you get. So you want to know very carefully how you're going to manage that trade. So either you're going to let it run to expiration and accept the fact that you might have maximum loss, in which case you need to allocate very carefully, or you need to have that risk management plan in place ahead of time.
Awesome. Thank you so much, Kane. Appreciate it. Chris, what about you? What's the number one thing folks need to know about income?
Yeah, I agree with Kane, and also the persistence to stay with the income trades, because when you have that backwards reward to risk, you have to be willing to trade through it. When you have services that, it might take you 4 or 5 winners, maybe 8 to 10 winners to get back to break even. You want that income to be winning, 85% of the time, 90% of the time, which is very doable in these markets. So I mean, just have a plan, know the reward to risk, and that's why we say this a lot when we're teaching traders. Know how to navigate the broker platform. Use something like Option Strat to build the trades out, get the visual, so if price is here, what is my risk reward? If price is here, what's my risk reward? That trade that Kane walked through is great because it is defined risk. The one thing I'll just say for people that trade butterflies, expiration is also the key to finishing in that profit trap. It's all about expiration. So a lot of traders nowadays are moving towards like a 0 and 1 day expiration on those butterflies, because you get that expiration right at it. You get a chance for that profit trap. It is the hardest trade in my opinion. I don't know how many of us in this room pin prices all the time, but I certainly don't. But it does offer with a high reward to risk. The brokering butterfly is offering the credit up front, and you still have that profit trap potential, which I think gives you an extra margin for error. But again, just to echo what Kane was saying, risk and then the persistence to keep trading through those income strategies, because the high win percentage will help you end up making the money you want.
Love it. And Kane just typed out that butterfly for everyone who wants to jump into that. Jack,
Perfect.
the income ace, what's your one or two sentence advice for income trading?
Yeah, the most important thing in an income trade is the underlying stock. And that has to be in a trend. For me, it has to be over $25 a share, has to be making close to a new 52-week high, trades over 500,000 shares, million shares average daily volume. And that trend is the most important thing. The stock has to be in a trend for the income trade to work.
Awesome. Thank you very much. Graham, how about you?
Yeah, I would say that number one, not all income strategies are created equally. Just because it has the name income on it doesn't mean that they're all the same and do the same thing and target the same risk to reward. For example, I gave you an income trade that's probably got a 60% chance of winning, whereas Nate or Jack probably gave you one with like closer to 90% chance of winning. They're not all created equal. And on the same note, not every income investor is created equal either. Some of you like safe, steady, very, very high win rate, and you're okay with 5 to 10% returns. Some of you want 20, 30, 40% returns, and you're okay with hitting at an 80% win rate. So just know, just because it says income on it doesn't mean everything's the exact same. Know the details, get to know the strategy, and find one that works good for you.
Awesome, Nate. And I think that kind of transitions well into what I think you're going to say. So why don't you give your answer to that question and we'll start to talk about the income machine a little bit.
Yeah, I mean, all of the above for sure. Understanding the math, I think people take that for granted. I really try to hit that hard. Understanding the math,